All right, all right, all right. That was not actually a Matthew McConaughey impersonation. That was just me saying all right. Let's get this out on Twitter. And I wanted to add a new, let's see, all the way down the bottom. Oh my goodness. Okay, there we go. Oh, there we go. We got somebody peeking in. Is it Paul? There we go. I've created my own hashtag. I'm a trendsetter now. I've got my own hashtag out there now. Wrestler! What is up, man? How's it going? Welcome to the live stream. Welcome to the aftermarket. Or as we call it, the Claybro after party. How you doing, man? I haven't seen you around in a minute. I've seen you in Claybros a few times, but I keep such weird hours, though. Oh, let's jump over, get Weeble up to where I can actually look at it. Oh my god, AMC, all kinds of interesting stuff going on with AMC. Oh my god, all kinds of interesting stuff. We need to shrink that down a bit. Flirting with that 2080 mark. So for anyone who doesn't know, there has been less content this week just because I am in class right now. Class in the mornings, and sometimes it runs a little bit later. Don't always make it home for lunch, and I've got homework assignments out in the field. It's job related. It's Network 2 training, just dealing with mainline amplifiers, the powering of cable plants, stuff like that. BBIG. Okay, I'll pull up BBIG. So what is going on? I don't. Well, BBIG had a nice gap up to start the day, pulled back a bit. Now I've actually been looking at BBIG. I've got it saved to my watch list. I am looking for a good entry point, but I've got to do more homework on it. Homework, yeah. I've got to do more research, figure out what am I looking for an entry point. So I'm kind of wondering, going off this run right here, we've got a open of 297, a low of 295. So yeah, I would maybe look at a 295 entry, if I could get a 295 entry point. So I don't know if it's going to come back down that far. I mean, it did, slow downward sloping right here. Of course, we got this nasty push down there. Hey, DD214, welcome to the live stream, man. Jump in a little bit before you have to start dinner. There's no problem. It's in the evening. It's aftermarket. Not much trading's going on. Options markets close. It's a good time. It's always good to teach or learn about options when the market's closed. BBIG will hit 5. I could definitely see 5. I know, haven't they been sitting at 99 or 100% utilization like forever? I haven't seen any Ortex numbers on them, but just the fact that they almost hit 550 here, I think 5 might be aiming a little bit low, based on, I've seen a lot of hype on them, seen a lot of people posting Ortex numbers, and yeah, I think the utilization's at like 100%. I don't know outstanding shares. If anyone has those numbers, definitely definitely jump on Twitter. Tag me in that with your text numbers. But yeah, I would like to find a good entry point, and looking at it, 295 might be a good point, good entry point to get in on it. Yeah, I'm not talking a super large position, 200 shares maybe, a nice light position, something to where, if it runs up in 2x's, if it runs past that in 10x, if it 10x's, it'd be great. We always want 10x is a good number, 100x is a great number. 1000x. We'll save 1000x for GameStop and AMC, and maybe PROG. Of course, a 500x on PROG would be nice. But yeah, I've seen a little bit. I see when people post BBIG on Twitter, posting information about it. So I know it's a short squeeze candidate. In fact, I think right now, if you look at just the raw numbers, if you look at all the factors that make up a short squeeze, I think BBIG is actually either the highest or like the top 2 or top 3 of stocks that are that could pop any time now. So honestly, I don't know what I'm waiting for, other than a really good entry point. So yeah, I might actually go through and 350 right now. Now $1.50, even if it just ran up to $5, $1.50 a share profit on 200 shares. That's still pretty decent gains. But I'd like to get in closer to 3. In fact, I would flat out, just, have it set up, have a limit order to where if it drops down to 3, keep an eye on it. If it starts to run and I miss out, well, I'm not the type who's going to catch the tail of a rocket when it's taking off. But if I could set a limit order, if it dipped down and hit $3 a share, I see we had 310 as the lowest mark back was that Monday? Actually, $3.06 on Monday. That was the gap down at opening, though. And that's that, 15 to 30 minutes of the day, that super volatile time to see it gap down like that and then immediately ran back up. Hey, Paul, how's it going, man? Welcome to the live stream. See, there was the same thing on the 10th. Huge gap down, big run up, almost up to 385 there. Your average is 362. Average is 362, and so you're just a little bit below your average right now then on it. But yeah, 362 with a pop to $5, depending upon your share count, looking at right about $1.40 per share. That's pretty decent profit. I mean, I don't want to math right now. I've been doing math all day. Part of my class is calculating out amperage, watts, volts, for powering a cable plant. Then we're calculating signal levels and loss, and I've been mathing all week, and my brain hurts from mathing. So I don't think I'm not going to math right now. If one of y'all want to post a percentage of increase, that is from 360 up to $5. I just can't math right now. So, Wrestler, how long have you been in BBIG? Because I know it's been talked about for quite a while now. At least October. Okay, back to September, it had a good run up. So I know sometime before September. I know a lot of these, though. So a trend that we've kind of been seeing is a stock will be shorted, and excitement will step in and really pump it up. And I don't know how long a lot of people have been holding it, but it looks like a bunch of people. There was good movement on these two candles, and excitement kicked in, and that candle ran up, and a whole bunch of day traders said, "Okay, yep, I've made money," and it pulled back. People saw the pullback and bought. Hey, it's getting cheaper. Let's buy more shares. So this cluster of candles from this nice big green candle to the first green candle that really made it take off, I see this is a battle between FOMO and day traders. Now, in the end, you see the FOMO really did drive it up. I don't know, I don't know if some of that could have been shares covering. Hey, Simon, welcome to the live stream, man. Since it's run up to 5, I bought some back in January. Okay, cool. It did get pushed down and then caught more excitement. This is in October. This is what I was thinking of. I did not realize it had this really good earlier push. But yeah, it's if I can find a good entry point, I could totally jump it. I did the same thing with PROG. Devil's Advocate put out some really good DD. I looked at it, saw how good it was, and I'm like, okay, I can get on board with this. Simon, seen you on Trey. Yeah, has Trey been streaming a lot lately? Because I thought I heard someone say that Trey really he backed off on a lot of the streaming lately. So let's narrow this up. Yeah, but a lot of the stuff I've seen on PROG, or not PROG, on BBIG, I like it. I would just like it at a better entry point. Mr. Simon gets around. Yeah. Added 400 shares to my AMC position 2 weeks ago, but starting to lose hopes on the squeeze. The furs can bend and twist the system in their favor. I certainly, I certainly don't want people to get discouraged, but ever since the week before Thanksgiving, we had a market. The entire market was pulling back. It was brutal, and they took advantage of it because. It's not when you see AMC price come down, you got to look at the overall market and just see how the market is reacting. Now there are times that if the market's if the entire market's pulling back, they might add a little bit of fuel to the fire just to help it pull back a bit further. But looking at it, we've pulled back up. We almost tagged the 2060 today. If we look at pull back out. I don't know why it went that far back. If we look at it, now it sucks because the trend line I put in on the 1 minute, and it doesn't like to cooperate with switching over to any other time frame. But if you look at it, how far? So they pushed us down to 1340. That was the last time they're going to get a chance like that. If you look at it, we ran back up. They fought and pushed it down, traded sideways. We're running back up. They try to push us down again. We're moving back up. Almost, we did punch above the 2080 level. We didn't quite make 2080 this time, and they are going to be fighting this week. They are going to be fighting to push us below that 1950 mark, because that's another batch of options. Because now, instead of looking at the solid dollar marks as our battlegrounds, now we're going to start seeing 50-cent increments, because the option chain has expanded out. But now, let's see if we can see that good on the 5-minute. Can we? Oh. So we're going to drop I want to go and get rid of this. So we're going to set a new mark. Oh, no. No. Derp. What'd I do? Oh, you're there. Oh, nope. Why am I so dumb? So we're going to set right off here. I see messages popping in. Give me just a moment here. So now, let's pull that further out. So now we're running off this. So this would be what I would be looking to push out in the long term. And it's easy to draw lines on the page, but the fact of the matter is, if we can keep this ascending channel going, they've already lost. They have to cover. That's, they can delay it as long as they want, but they have to cover. And the longer it takes, the more it hurts them, because they're paying that cost to borrow. They are losing money every day they're holding those short positions. Trey goes on live on Twitch at night and only has like 10 viewers. Oh, okay. Yeah, Wrestler saying, hang on, every day we hold, we're closer to the MOAS. And, now certainly I'm not saying hold no matter what. If you have stuff going on in your life, if you have bills you have to pay, if you have emergency medical bills that come up or anything like that, there is nothing wrong with leaving your AMC position, because you got to take care of, got to take care of your home life, got to take care of your family. So if you have to exit, there's nothing wrong with that. But as long as you're still in it, as long as you can still hold, I'm not just holding for me. I'm holding for everybody who everybody who wants to hold, everyone who wants the MOAS, everyone who wants a fair market, wants transparency. I'm holding for all of them, not just for myself, but for my family, for your families, for everyone's families, for everyone who has ever, even back to 08, and they shoved everything down. They destroyed the housing market. How many families were ruined? How many lives were ruined? Financially ruined, and they're not getting away with it this time. We're organized. We have a community, and we're here every day. Claybro, I'm here whenever I can be. Claybro's here every day. Matt Kors, he's out here. TMI, Short the Vix. Trey's. I thought Trey might have stopped streaming for a while, but yeah, if he's got streams going, we're all here, and we're here for a singular purpose. Lou On Demand has been giving me assurances. Yeah, I've never checked out Lou's channel, Wrestler. I'm still up over 200% on. And Simon, it could be easy to want to go ahead and take profits, and being up 200%. That's nothing. That's a good percentage gain, and yeah, it can be hard to hold. But it's a lot easier to hold when you're up. Just keep that in mind. While you're up, it's a lot easier. On my AMC position, I am down almost 49%. I'm not going anywhere. Until this is resolved, one way or the other, they're just numbers on a screen. So it doesn't matter. Yeah, it's painful to look at. Almost half my AMC investment or almost half the value of my AMC investment's gone. I'm still holding. It's just numbers on a screen. They can push it down. I could be 49% down. I could be 75% down. If they haven't covered, this is not over. It is still game on until they cover. Paul saying, I have 80 AMC shares, not going to break me if it tanks. Yeah, that's, yeah, and that's part of it, Paul. Investing is just like gambling. Only play with what you can afford to lose. So yeah, that's it. Even if it tanks, the fact that you're still going to be okay, that's, after, even if it doesn't pan out, I'm still good to go. I've still got the rest of my portfolio. I've still got my 401k. I've still got, the money I'm investing is extra money after everything's said and done. So, I don't have to fret about it. It's bad to see, like, oh, it sucks. I'm down this much. But it's, I see it just pop up from Paul. It's not a loss until you sell. They can do whatever they want with the numbers on the screen. As long as I'm not selling, I'm not losing. That is why I like watching Lou. He is good at that. Whenever I feel like I'm losing my hopes, I go to his channel and see if he's uploaded. Oh, okay, cool. I might have to check Lou out. I've never gone over to his channel before. I don't really need that money as of now, but I really want to buy me a house already. I just want some land out in the country. I don't need a big mansion. Small house with land, garden on it, chickens for eggs, cows for milk, goats for milk, grow crops, not too cold in the winter. That's a definite thing there, because wood burning stoves. That wood's got to come from somewhere, so I don't want it to be too cold. I can handle snowy winters, just not 30, 40 below anymore. BBIG down 2.23% to 223. I like that number. DD214. He knows why I like the 223. If only it was up. Could you imagine? This is for DD214. Could you imagine if a stock was up 223 to a record high of $5.56? Of course, I'd rather see it up 308 to 762. Of course, if they're avid hunters in there, they get the jokes also. But little bit of military humor. So yeah, I want to pop over on I'm going to drop back down to the 1 minute chart, even though the 1 minute chart. See what I mean about when you go from the 1 to the 5? So we were above that line. I dropped down. See, that line just does not want to play good. It doesn't want to play nice. I don't know why the 1 minute chart is so horrible for graphing. I got 17 acres, small farmhouse. It's a whole job to take care of. Yeah, but I'd be at the point where I wouldn't have a job to, be out living off the land. It's, this is all said and done. Just, I like the Warren Zevon song, "Splendid Isolation." Just me and my family out there. Maybe once a month, come to town or whatnot. Go see how. Do it like Claybro's Amish. Come to town, see what the English are doing, because we all know that. We all know Clay's out in Amish country. That's why he had the shiplap. Somebody introduced him a new thing called drywall. He did the other room in drywall, but it was either shiplap or wagon lap. That's being in class. I did manage to get the first comment on the morning video. We just happened to be on break when he started. But man, being in class and because it's a we're on camera. It's a participation class. We're doing calculations. Everyone's we're all sharing the information on there. So it's like I need an IV of clay stream going on. It'll be nice when the week's over and I can be listening to the live stream while I'm working. Oh, that's what I was gonna do. I was gonna jump over, check the option chain for this Friday on AMC. I kind of want to see where the calls are sitting. Look at that $20 mark. If that does not bring you confidence, almost 23,000 contracts at the 20 mark. 22s up to 10.8, 10.5 at 23. These are some nice respectable numbers here. Get up around that that psychological increment of 5, the $25 mark, coming up on 15,000. So the options are supporting a thesis of running up further during the week, and this 20 is going to be a battleground. But man, if we break through that 20 and really get a good run going, they're going to be fearing us hitting 22, 23. Because those are, if you look just mainly off the options chain, having $2 amounts, solid dollar amounts back to back, over 10,000 each. There's that 5 digits right there. And remember, I always like to, if I'm going to be playing options, I base a lot more of the information I'm seeing off where the interest is over 10,000. Just because that's showing that the community, whether it's apes, whether it's retail traders, whether it's smaller hedge funds, smaller funds that have a stake in AMC doing better. This is the community having confidence. They're staking their money that we might have a run up to that. So I like seeing, and this 20 mark, over double the next highest count until you get all the way up to 25. Technically, depending on how risky, how what your risk tolerance is and how cheeky you feel like being, I swear that this the $20.50 for covered calls, $41, knowing how hard the hedge funds are going to be fighting to keep us below 20. Even the 20 itself, unless we get a whole bunch of buying pressure, this is, if you look at the bottom of the screen, where's it? Where's the cursor? Right here, right underneath the cursor, it says not financial advice. This is a definite moment of that. If you had cojones made of depleted uranium encrusted in diamonds, wrapped in neutron star material, you could play covered calls at 20 and darn near bet the hedge funds will not let us close above 20 on that. Just with that many contracts, that is going to be a serious battleground come Friday, which means we need to eclipse this tomorrow. Because we know come Friday they are going to be fighting tooth and nail to keep us below that 20. We need to gain as much ground tomorrow. Start pushing. Make this 22 and 23. Make these a huge threat for them. And see how much powder they have left to burn. Because if we start threatening these and they realize, 23, 33, 43, 44... just these strikes here, they're looking at over 44,000 contracts in the money. If we start threatening 22, 23, they're going to be bricks hitting the ground because they're going to be dropping them. This is, if you're looking for a gamma squeeze, 22, 23 this week, could be, we don't know how many of these they've already hedged for. But we start pushing on 22, 23, and that could be a game changer. That could ramp it up. And I know there are people who are looking towards March 3rd. I've heard that date kicked around. I don't know the reasoning behind it, but somebody was saying March 3rd, $500, $800 a share. I don't think there's anyone who can actually predict the MOAS. There are a lot of people out there who give you different reasoning, different numbers, different theories. I've had my theory that when tax returns start coming out, it's going to give people more money out there to buy shares and potentially drive the price up. But if you're looking for gamma, this is a pretty good setup. If we can get the pressure tomorrow, close to this 22, and make a fight of it on Friday. That's really what this week is going to come down to. Can we get pressure tomorrow? And if we get up that high, can we fight against the inevitable push down? Because they don't want us to close above 20. What's y'all's thoughts on that? And you don't have to have huge scientific reasoning or algorithms or anything like that. But just what do y'all think of that? It's do y'all think it has potential or merit? Who do we still have in chat, by the way? I went on just a little bit of an options rant right there, but and on the opposite side of the house, because y'all know how I love my bull puts, so y'all know I'm gonna pull these up and have a look at them. Of course, this week is not much time left. Let's see how next week's bulls look. Okay, Paul's still here. Paul's still hanging out. That's a nice 20% right there. 24% right there. Yeah, that's not bad at all right there. 24%, this is right at that quarter up mark that I like. Oh, okay, DD14 stepping in and out. That's cool. I'm just happy to be able to pop on here for a little bit and provide a little bit of a stream. Oh, the question was, so I was looking at the calls for Friday. And what I was looking at is that, I don't think the hedge funds really want us to close above 20. But I think tomorrow, if we can really, really get a good push and threaten the 22 and 23 mark, because at the 22 mark, we've got 10,800 contracts, and at 23, we've got 10,500. So I was, thinking that if we can, people are looking for the gamma squeeze, but if we can get pressure tomorrow and close in on this 22, 23 mark, and come Friday, because that they're going to try and push us down below the 20 mark, where we have 22,000, almost 22,800 contracts open. Just that, if that sounds like a reasonable, that's kind of my thesis on how the week might go. If we can threaten 22, 23, come Friday when they start, attacking and using up what powder they can to drive us below this 20 mark. If that sounds like, as a feasible thing in the minds of everyone else. Because, I can sit here and, spitball out theories left and right and, take the title of my stream and make it sound super outrageous and clickbaity and stuff. But, I don't want to be like that. I want to, provide solid analysis, not just oh well, if this happens, this will be a direct result of that. So if we have A happen, then B happens, and that will cause C. I'm just looking at the numbers and seeing where some strong points might be, where we might get help. I think we do a lot of good. The SEC's been posting they've charged financial companies for failure to report trades. For failing to report trades? I have not seen anything about that. Are you talking not reporting trades or just delaying the reporting of trades? Because I know, every purchase that goes through, doesn't matter whether it's through a lit market or through dark pools. As soon as the trade is executed, well, not as soon as, but I thought it was within just a couple seconds of any trade being executed, it is reported to the stock exchange. So I hadn't heard that the companies are failing to report. I know that some companies, there was talk a while back about companies that were finding ways to delay the reporting, and I forget who it was. There was something about, for lack of better terms, somebody was putting in a speed bump on their trades, putting in a slight delay in the reporting of their information. And the argument against that was it was no different than people using, if you could get by with a 10-foot Ethernet cable to or whatever kind of cable to get from one piece of electronics to another, you could instead of using a 10-foot cable, you can use a 1,000-foot cable to create an artificial. What was the word they were using? An artificial geological or geographical lag to it. And this other company had added a digital lag to it. And they were just saying, it's the same thing there. But yeah, if you find that, tag me in it on Twitter. I love getting every bit of information I can because, well, I like reporting information, and I can, if you find it and tag me in it, I can look it over, and not only look it over, but I can, like I said, I like to provide, the best analysis I can, so I can look it over and see, what possible implications could be from that, just on the way I understand things, and that's the thing. The more people you get looking at stuff like that, and the more people coming up with theories, and I'm not talking like the lizard people have infiltrated Citadel, and they're actually using our shares to fuel their spaceships. Theories like that. I'm not talking about those kind of theories, but coming up with different reasons why, and having analysis behind it and actual reasoning. As Paul says, facts. Yeah, no rush on that DD214. Just in the next couple days or so, if you can come across it and share it and tag me in it. But yes, to the best of my knowledge, there are no lizard people at Citadel that are using our shares to fuel their spaceships. I'm fairly certain of that. But if I disappear and y'all never hear from me again, know that the lizard people got me. I knew the lizard people story was true, yeah. Well, the lizard people could be true, but I don't think they're using our shares to fuel their spaceship. Well, of course, that could be why they're, 800 billion synthetic shares, 900 trillion synthetic shares. They actually have a synthetic share factory that's pumping out shares because they have an entire fleet of ships they have to fuel up with our shares. So what is everyone else up to this evening? Oh, that's right. I was looking at bull puts for next week. Just kind of doing my stock market homework, looking towards maybe opening some positions for next week. I do like the 24% on those 1750s. Let's take a look at how the $18 mark's been looking. Uh, 18 is still 18 is under a light threat, not a heavy one. 1750. So this goes into a lot of your risk tolerances. So I am fairly certain that 18, with how we're trending right now, 18 should hold up pretty good. Now there is the possibility, because you look at this little run right here, where it did violate that. So the next mark under 18 would be the 1750. So I go ahead and have a look at the 1750 mark. And looking at that, I have to go all the way back to the 9th. So as you can see, the 1750 has held up longer as a good level as opposed to the 18. So I'll jump back over on the options, and of course I'm looking at next Friday, not this week's expiration. Okay, I was looking at the right ones. The 1750 were holding up good. The 18s, so the 18 was still a little bit of a threat, and those were $18 premium per $50 of collateral. So, oh god, I'm mathing again. It's 36% profit. Your profit potential is 36%. Or $36 per $100 on contracts. So, y'all know me, I like to quarter up. For every 100 that I put up as collateral, I like to receive 25 as premium, quartering up. So, put up 400, get 500 back. Now, this is close enough. This is only off, playing these, it would only be off by $1. This is a 24% profit. If you take out two contracts, $100 worth of premium, or $100 worth of collateral. Sorry, $100 worth of collateral, receiving $24 worth of premium. This is almost right at your quarter up mark. So we've got that 1750. We just looked at that and saw it the last time we were down below that level. So depending upon how much risk you want to take, if you're willing to risk that $18 mark for 36%, nothing wrong with that. Me personally, I like a little bit more of a buffer. And I think that right now, looking at bull puts, I think the 1750 would hold up. It's another 50 cents worth of wiggle room you have. So I would give up a little bit of potential profit for a little bit more safety. That's just maybe sometimes I'm too safe of a trader, but I've also had ones that get blown right through, and all of a sudden, the stock does the exact opposite of what I want it to do. Now, if I do get in on these, if I was gonna be risky and hit these 18 up, I'd probably set my stop loss at 25. And if I was going to enter in these, I would enter them after the first 30 minutes, because all it takes is that volatility to kick in. Or if I set these, I would not set my stop loss until after the super volatile period. That first 15 to 30 minutes of the day, I would not set the stop loss. I would wait for the market to calm down a bit. And that would kind of give me a look at how the day is going to progress. Because if it starts to gradually pull back throughout the entire day, well, that stop loss didn't immediately get triggered, and I might decide to manually exit this before it hits that $25 mark. It all depends on, you got to look at what it's doing, and you got to kind of trust your analysis on if the way it's pulling back, if it could continue going through where your stop loss would be. Well, if you're closing this before your stop loss and you're right, then you preserved a little bit of capital, and that's part of what doing options is. And knowing your risk, having your stop loss, those are to preserve capital. Well, if your analysis starts to tell you it's going to get bad, it's going to get bad quicker, and it may not recover back up to your profit zone, then you kind of owe it to your wallet to preserve as much capital as possible. So yeah, if I was going to set a stop loss on those, I'd be at 25. If I was going to set a stop loss on these 17 to 1750s, I would look about a $20 stop loss on those. And just because I like those increments of 5, it's a creature of habit. Paul says he's watching and learning. Well, I'm glad. I'm glad you're watching, and if you're learning, I'm ecstatic about that. I'm definitely glad when people come on and learn stuff. I've been doing nothing but working. I've not been able to enjoy clay streams. Yes, same thing. 214. In the morning, all this week I'm in classes. Afternoon, I've got work-related homework to do. So I haven't been able to be in the streams that much this week. Might carry over a little bit into next week, but hopefully I can get back to a regular schedule soon. So yeah, I don't want to actually math. Doobie doobie doo. Oh, yes, I got it. Notify me they'll be closed for President's Day. It's like, well, yeah, I kind of knew that. What are we looking at? Okay. Oh, wow. Yay for me. Okay. Brain doesn't want to work. Brain doesn't want to work. Thank goodness I carry a calculator around in my pocket. Putting a calculator on a smartphone was the greatest thing they ever did. That's what I thought it was. Okay. Well. Yeah, I just had to run through some numbers. Just on potentials of opening up contracts, and because yeah, I could just buy and hold and sit back and wait, but I like to make moves. I like to oh that's why derp. There we go. That's more. Oh, I don't like that. So PROG covered calls pretty much at this point on PROG, because we were just over on the bull put side of the house. And these have, because we're in that zone right now, in fact, we're almost smack dab in the middle of that zone between $1.50 and $2. $1.75 would be right in the middle. We're 3 cents off dead center. Those are a little... I don't like those, but if you drop down, so for $50 worth of collateral, you're getting $2 worth of premium. No, thank you. I have had some not good luck on playing calls on PROG, so I won't play those. Buying of calls, selling of covered calls is a different story. So. At $2, I know we flirted with $2. We've punched through it just a little bit. The fact is, I would play $2 covered calls on PROG for $8 premium. These are 9 days out. Not this week, but next week. Because if you look at this week, your covered calls are only worth $2 worth of premium. I would play part of my position on $2 covered calls for $8 premium. I'd play part of them at the $2 mark because I would have no problem. My average is $1.61 on PROG, so I would totally, I would welcome not only the profit from that, but the premium. And if it does not close above $2, or if I don't get exercised on before then, well, I still keep the couple bucks anyway. It's not much, but this is nickel and diming 101. This is just how to create a little bit of capital here and there. And the thing is, if I did get executed on, or they expired and I sold them at 2, well, I could just turn around, go to the other side, and collect $4 premium per contract, or even higher if I decided I wouldn't mind getting back in at $2, playing cash secured puts, meaning that I put up the money, and if it hits there, I buy 100 shares at $2, which is the same 200 that I just sold them for, but instead I'd be collecting $31 premium on the other side. And see, the fact is, these right now are almost guaranteed. It would almost be the point where if I got executed on the calls, if it came back down, I would just buy back in. But depending upon how far it ran up to, I could, play the other side of it. There are ways, there's more than one way to make money in the market. And it doesn't matter whether it's going up or down, you can still make money, or even trading sideways. So we're going to get a little bit cheeky here. So let's look at that $1.50, $2. We're going to get a little fun here. I wonder, standard? Let's check the standard condor. So what do we got here? These are 90s out. Okay, this, I believe, is the contract we want. Let's graph that out. Okay, yep, there we go. Oh, that's on the buying side. No. Iron Condor. Sell, because we are sellers here. We are not among the buying in this. Here, we like to sell options, not buy options. So this is the Iron Condor. This is actually one of the ones. Hey, Josh, welcome to the live stream, man. And we're gonna drop this down to one contract, just to make it easier here. So this is the Iron Condor, and this is one that I use for a stock that likes to trade sideways. Doesn't really gain, doesn't really lose. It stays range bound. And right now, we are right in the middle of that range. So what goes on with this is, essentially, you're buying a put at $1. You're selling a put at $1.50. You're selling a call at $2, and you're buying a call at $2.50. So literally what you're doing here is you're creating a bull put on one side and a bear call on the other. You're basically playing two different strategies for two different directions, but the trick is, as long as it stays in the middle ground between $1.50 and $2, you are at your max profit. So on this, you would be putting up that's the share price. So with this, you would still, because there's $50 or 50 cents in between your strike prices, you are still putting up $50 of collateral, and you're collecting $8 worth of premium, because that's the difference in premium between all four of your contracts, or between your bull put and your bear call spreads. So this is one that you would use on a stock that you know it's going to trade sideways. It's going to, as long as it stays between $1.50 and $2, that's your butter zone. That's where you're going to make maximum profit. Now you do get two zones where you leave, which if it runs up to $2.08, or if it runs down to $1.42. And the way you calculate that is, it is just your all it is the price that it hits minus or plus the collateral you received, or not the premium you receive. Sorry. So essentially, with this contract here, the worst you're going to lose $42 if you end up at above 250, you lose $42. If you end up below $1, you lose $42. That is your maximum loss on this contract. So anywhere through here, you can still preserve a little bit of capital. So this is one of those, we've talked day zero, which is where you're, you're trying to figure out what you want to do, and day one is where you go out and buy your call, sell your call, buy your put, sell your put. Day two would be where you start doing your bull put, your bear calls. You start doing all those. This is like if you're going day one, day two, day zero. This is like week 5. I have 100 shares of PROG. Would it be any cheaper? Would what be any? Are you referring to this spread right here? If you own shares, the two contracts that really crikey. Am I back on? Am I back on normal? Somebody turn my screen on normal here. No. The collateral is just Am I back on shares now? Okay, so the collateral, all the collateral is basically a safeguard. It is your own built-in hedge in case you get executed on, meaning that if you're a seller, that the other person decides that they want to go and execute their leg of the contract, and your collateral is just ensuring that if the trade goes south on you, that you have the ability to exit all legs of the trade. That's what your collateral is for. As long as you're selling, you have to put up collateral, one way or the other. If you're selling a covered call, your collateral is your 100 shares. If you're selling a bull put, say at PROG, not a bull put, a cash secured put. On PROG, if you wanted a cash secured put for $1.50 per share, then your collateral would be $1.50 times 100 shares, which would be the cost if the contract was executed. Anytime you're playing a spread, your collateral is the difference in your two strike prices or 4 strike prices. Your collateral just ensures that if the trade goes south on you, you have the ability to exit your trade. So if you have collateral, the two that you would be playing with, let me get back over to PROG here. The two you would be playing with is if you were selling covered calls, which, if you wanted to sell covered calls at $2, you would collect $2 per share, meaning if it gets executed, you lose 100 shares, you gain $2 per share, $200, and you would collect $8 of premium. That would be your collateral. And the other one, if you're owning shares, and I do not, I've not done these, I'm not sure the mechanism of how they work, is a caller. So we can actually we can look at this caller here, because I have not done a caller. I have not referenced them. So let's just do a caller. Let's use the $1.50 and $2 just to see what it looks like. So what we have here Why does it always go to 10? It always wants to default down to 10. So it looks like on the caller, you are selling a covered call at the $2 mark, which was the exact same thing I was saying as far as having the dinner's ready. Have a good. Hey, thanks for stopping by, Josh. Always good to have you in here. Hope you have a wonderful dinner and a wonderful evening. So you would sell a covered call, and this is where your collateral, where your shares would come in. Now you buy. It's saying you're buying 100 shares of stock, but you already own them. And you're buying a put. So interesting. So you're buying a. I'm trying to understand this one. Yeah, I'm going to have to watch some videos on this to kind of understand what's going on here. Because you already own the shares, but I'm trying to figure out if that means you buy the shares in order to sell a covered call, and you also buy a put at the same time. Yeah, I'm going to have to do some research on this one. I knew that there were two that you use for having shares as collateral, one being the covered call and the other being I thought it was the caller with stock, but it looks like this is an all-in-one where you're buying the 100 shares and you're selling covered call and buying put at the same time. But on this one, for whatever happens, if you run up to $2, you're earning $24 of profit. And different profit levels. Yeah, I'm gonna have to do some research on this one just to see what the deal with it is. Oh. Is this really PROG's chart? So let's zoom out on PROG. So where's that $1.50 to $2 mark? Yeah, there's $1.50 right there. Oh, we're over $2 already. Yeah, I'm gonna dig around on that and kind of see what the deal was at, because depending upon how the mechanism of that works, that could be a potential to make a little bit of cash here and there on the side. And just kind of looking through some stuff here. But yeah, that was a really, really long answer. Having 100 shares of PROG would not make your collateral any cheaper. Is it collateral is a safeguard against everything going wrong with your options contracts, unless that's what you intend. And because there's an option trading strategy called the wheel, and all it is you have 100 shares and you keep selling covered calls against it until you get executed on. And after you get executed on, you keep selling cash secured puts. And every leg of it, you're continuing to, every week you're making premium off of it. And you just keep doing that till you add more money. And when you get more money, you can buy more shares and you can increase your position on the wheel. Tons and tons of videos on there, but that's a short version. You just sell covered calls, and when you lose your shares selling your covered calls, you sell cash secured puts, and you're earning premium the whole time. No, close. close. How do I get this to go away? I don't care about this. Oh, let's just jump off caller. Let's go back to singles. Singles on calls. Never heard of the wheel? Yeah, it is really a meat and potato option strategy. Yeah, so we're gonna do for the sake of argument here, okay? So for the sake of argument, let's say it is Monday, and we are currently looking at the option chain for this Friday. So we look at it, and we see the $2 mark. So you are sitting on, we'll keep it real simple. You're sitting on 100 shares of PROG. So you go ahead and on Monday, you sell your covered call. You collect $8 of premium. That premium is yours to keep. Whenever you're selling, the premium that you receive is yours to keep. That goes straight into your brokerage. It's immediately yours. And your 100 shares are tied up until either it gets executed on Friday or until Monday when your collateral is released back to you. In which case, so if you don't get executed on, then the following Monday, you can go ahead and sell another covered call at whatever the premium you receive is. So you keep receiving this, and it'll change week by week, but you keep executing this covered, or you keep entering this covered call, and you keep earning $8 premium per contract, and you keep doing this, and it keeps closing below $2. So it never you never lose it, never lose it, never lose it. 1 week it closes at $2.01 a share, and the person on the other end pulls a trigger and says, "Okay, I'm taking those shares with that money." So at this point, you lose your 100 shares. You've collected all that premium, and you just received $200 because that person is buying 100 shares from you at $2 a share. So you collect the money for selling your shares. So the very next week, or the Monday when the market opens, you are now on the put side of the house. So you look at it and you're like, okay, so it's dropping. After market hours, it fell back below and it's hanging out at the $1.78. So Monday comes around and it opens up around $1.78, and you say, okay, well, I'm going to go ahead and start selling cash secured puts. So the way this works is you put up $150 of collateral, because if you get executed on, you have to be able to buy 100 shares at $1.50 a share. So you collect $4 of premium, and it keeps going, and nothing happens. You keep collecting the premium week after week, never changes, and then eventually you get executed on, and that $150 of collateral you have goes to buy 100 shares of PROG at $1.50 a share. So the whole time you were collecting premium, or at any point you can buy your shares back the next week. If it drops down to $178, you say, oh, I just want to buy the shares back. Well, you've made profit off that, and you're back to having 100 shares, or you can do it by cash secured puts. So you get to the point where you've got $300. You haven't been executed on these yet, so you've got $300. Well, now you can enter into 2 contracts. So now you put up $300 of collateral, you're collecting $8 of premium, and you keep doing this until it drops down and you end up getting executed on. So now you have 200 shares that you purchased for $150 or $1.50 a share, $150 per contract. So at that point, you go back over and you continue to sell covered calls at the $2 mark. But now you have 2 blocks of share. You've got 200 shares, so you can do 2 contracts, which means you now get $16 of premium every week until you execute on. So as you see, a wheel is a way, as long as you're comfortable with flipping those shares week by week, you can continue to soak up premium. Now, if it moved up and got you to the next zone, then okay, well, now you're just playing with, if it started holding above $2, well, your next wheel, you would have to move, your share price would move higher, but now you'd be playing at the 250 mark. So it's just a way to generate wealth on a stock that keeps, either stays sideways or continuously, moves up a little bit and then moves down a little bit, not huge movements. Because if it runs up and you end up, if you sold your covered call at $2 a share, but the stock price ran up to $20 a share, you're losing out on a whole ton of money right there. So it's best on a stock that's not really moving around too much, that's kind of range bound. So yeah, that's a quick and dirty rundown on how the wheel works. And yeah, I've ran the wheel. That was actually one of the first things I started doing. I think I was using Denison Mines. DNN is the ticker for that. That was actually one of the first stocks that I started playing options with. So on this one, you'd be looking at $1 to $1.50 range as far as where you'd be playing your wheel at. And I picked this stock because it was under $2 a share, and I figured, I think I got it for like $1.25, $1.12. I got it for less than $1.50 a share. It was closer to somewhere between $1 to $1.25. So as far as a training tool, that was a good stock to use to train on for options. But I'm going to go ahead and wrap it up for the evening. It has been, as always, it has been a blast. If if this is a lot to take in, do a little bit of research. If you have more questions in the future, anytime I'm streaming, if anyone ever wants to visit something or revisit something we've gone over before, I'm totally down with that. But I want to thank everybody who stopped by this evening. Paul, Josh, DD214. Who else? Simon popped in. Wrestler was in the live stream there for a bit. I want to thank all y'all for stopping by, spending a little bit of time here, and hopefully I imparted some chronology on you. I hope everyone has a good evening, and I wish you good health and good trades.